Hey, good morning, everybody. Welcome to this week's long form episode as we get you into a long holiday weekend with the Easter holiday upon us, airing Friday morning. We'll be back early next week with regular standard programming here on Mining Stock Daily. But an important conversation welcoming back Julian Brigden from MI2 Research. And it's been 5 months since we've had Julian on. In fact, 5 months ago, we talked about a potential power shift between the executive branch and the Federal Reserve. And boy, that has played out in the headlines here in the last 24 hours. So obviously we revisit that discussion here. And obviously we have to talk about the fragility of the U.S. economy on the back of the tariff continued announcements and news and headlines. What's making sense? How are we approaching a new economic system on a global scale here? And really the vulnerabilities of the bond market, what it's telling us here. So Julian provides a wonderful discussion, providing the landscape of how, the cracks in the system continue to be widened and why gold continues to be that continued safe haven investment away from things like U.S. treasuries and U.S. equities. So special thank you to Julian for the time. Special thank you to Vizsla Silver, Caliber Mining, and Integra Resources for their support of the podcast. Have yourself a great Easter weekend, everybody. We'll be back later next week. Be well. All right, everybody, welcome back into this week's long-form episode on Mining Stock Daily. And obviously, a lot to cover as we go into a long weekend, Easter break here. So happy Easter to everybody out there who follows, who's the Christian faith there. Appreciate it. But listen, let's find Jesus here in the markets and the global economy. I'm happy to welcome in a really good friend of mine and somebody I could privilege of throwing out zany ideas to and pick a brain of for once in a while via text message. That's Julian Brigden from MI2 Research. Julian, the last time you were here was 5 months ago, and I actually titled that conversation "The Looming Central Bank Fight for Independence." And here we are. Yeah, you about to spit out your coffee. It's like, how fortuitous. Because that conversation continues just today in the last 24 hours. The speculation is with Donald Trump.
Interesting use of phraseology.
Yeah,
I thought in the president's comment termination. Okay. Well, look. What do we know? We know that the president has got rid of certain officials. There was a FDIC official who was in the same contract formation as they were done. They were terminated for cause. As someone who has fought a legal battle over cause, it's a bugger of a word, right? So if you're prepared to take things to them, which President Trump appears to be willing to do, and this is an issue. I'm hoping, and I think this would be the case, that calmer mind would prevail. And then from what I've heard, Scott Bessent has been very instrumental in the last couple of weeks, particularly when we saw that, what I refer to, Trevor, as a sell the US moment. And I was saying on one of the podcasts, I've been doing this for nigh on 40 years. It's my birthday. It's a big one.
Oh.
I'm not telling you which one it is, because I'm not ready to even begin to admit.
You don't look a day over 50, Julian.
Thanks. Feel it. So I think, I probably, I've been doing this for nigh on 40 years. I have seen 5 or 6 occasions where you've had these. So this is wholesale dumping US assets, selling dollars, selling treasuries, selling stocks. And every single time, Trevor, that I've seen them, they've lasted for at most a couple of hours before policymakers have to respond. I think we clearly saw that said response, right? We saw them back away from some of the more extreme tariff threats. And I think that makes logical sense. So I'm hoping that calmer minds will prevail in the same way that they did around the treasury market and the tariff issue, in persuading the president not to replace JP. I mean, that said, even Scott Bessent had advocated previously that he would they would bring in a parallel to be JP president, right? And that guy would kind of show how the president wanted the Fed to vote. I mean, that would be. I think. Look, I don't want to get hyperbolic at the moment, but I'm quite shocked how quickly some of the conversations. I'm in London at the moment. How quickly some of the conversations are starting to morph over this side of the pond or abroad about the sanctity of US treasuries. There was a story on Bloomberg today about the head of the European Insurance Association saying, we're worried about the treasury market. And I think that's probably more to do with liquidity rather than, whatever. But there are conversations going on amongst investors about rule of law in the US. Is it a place that I can rely on anymore to have my assets? And that may seem like a very silly conversation, but this is part of a system, Trevor, that the US set up, right? This is questioning a system of essentially what we refer to as what you would refer to as a pact system. So a pact system we've seen 7 throughout history. Your viewers might be familiar with Pax Romana, right? That was the first one, and we had Persian one and various other ones. We had a brief one before the American one came along. The US one has been unique in some respect because it's been a very benevolent one. Typically, they're enforced at the point of a gun or a spear or a sword or whatever. But they have very, very clear metrics, and they are basically that you have a dominant military power that is able to impose rule of law and a common currency or common form of exchange. It has benefits for everyone, and the trade tends to blossom in that environment, and benefits flow back to the provider. Now, the US has definitely hit on a tipping point. We can talk about that in a second, but this concept that this system that you've grown up in the post-war period, Trevor, is now seriously being questioned, I think is a very dangerous one. And certainly if you would start questioning Jay Powell's independence, it would be incredibly dangerous, mate. I mean, I think if we think that the moves that we saw in the treasury market the other day are just are a dangerous sign, then you get rid of the central bank governor and you remove his independence. Your next stop is the Fed is going to come in and backstop the treasury market, because the long end will just get eviscerated. And then we'll be doing QE in an environment of inflation, and then the dollar gets eviscerated. And, obviously we're on a conversation here with a lot of mining kind of people, and the concept of, we've got some good friends at North Star Bad Charts, right? They've got sort of 125, 150 on silver. I think those numbers are plausible in a scenario. But I've always said to people when they get very excited by this, I'm not sure you want to be living in that world. Selling. Right? It may not be a very nice place. When silver is, 125 to 150. I think the world could be quite unpleasant. I hope we don't get there, but fucking around with your central bank governor is one way to pretty much ensure that you could.
Yeah. We know there's fragility within the U.S. economy the way it is. I mean, we've known this for a while. This is before Trump. It seems like that that dollar hegemony's this decay has just been expedited here in the last month and a half due to the tariff news being a lot more than people could stomach. But with this news coming out of Washington between the executive and the Federal Reserve, and not only are we adding potential for an economic crisis, we're obviously adding with a potential constitutional crisis.
Mm-hmm.
And this is just one story of the constitutionality of some of the decisions the Trump administration has been making. There's others obviously involved, other stories that we don't necessarily need to talk about, but it does come to question as, how much trust there is in the institutions and the system. And we're just seeing those walls crumble piece by piece. It seems like each and every day, and that would just be, it almost would feel like that would be something that would break the camel's back when it really was something that could be eminently done. And obviously, they would just forego any sort of reprimands from court.
So look, as I said, I don't want to get hyperbolic about this. I don't want to make this political. I'd say, one of the things that we do is, and I will say, and I just, we tend to have quite heated internal conversations with my team, and I've got people on all sides of the fence. And I just had to read everyone the riot act this morning. And I said, because everyone gets very upset and very judgmental, whether they're a Democrat or Republican or not either, they live abroad. And I said, our job is not to judge the policies. Our job is simply to interpret the policies it comes to financial markets. And in many respects, I think what President Trump is trying to achieve are very laudable ambitions, right? We have seen, unquestionably, a hollowing out of not just the US middle class, but the Western middle class as jobs have been outsourced. We have seen decays in society. We've seen decays in physical decays in infrastructure. We have definitely reached in the US that point of what's referred to in a PAC system as imperial overreach, right? The system it's getting too expensive for the US to hold it together, especially with the rise of China. And, it's fine trying to contain Russia, not that ever bigger a threat relative to the US. China's quite a different kettle of fish. But this has consequences, Trevor. When your starting point is that foreigners have $20 trillion in the US equity market, and in the last decade have piled in net, so take out what the US has put abroad, $17 trillion into US assets. You're starting at kind of peak overweight, and now you're starting to wobble the structures and making people question them. Whether those are ultimately valid, we don't know. I don't care, right? I do, as a resident of the United States, but I don't as an investor. But I do worry if people start to question the foundation. And I do, as I said, I don't want to get hyperbolic about this, but these conversations are happening, and they have consequences, right? They have consequences. One very, very large real money Asian account told me, and the quote was basically, as long as the president was providing the ships, in other words, the defense umbrella, we were happy to park money in US treasuries and not earn a lot. If that's no longer the case, then the US is going to have to pay a lot more for its money, right? This is the way a PAC system works, right? You provide us with that defense umbrella. You provide us with the rule of law structure. You provide us with the reserve currency. Now, we're seeing some of the consequences of that, but I do want to say, guys, this is not a function of us being the defense umbrella for the whole of the world. Okay? The reason we are running such a large current account deficit, the reason we have hollowed out the middle class in the United States, the reason our manufacturing has declined, is really not much to do with that. It's really about decisions made by the corporate sector. The enemy, the true enemy, to be brutally honest, is the C-suite. Mm-hmm. It's Jack Walsh, it's shareholder value. It is maximizing the return to shareholders. And in that structure, management is the most leveraged, right? The most leveraged. That is really where the problem is. Yes, China and Mexico have been the beneficiaries of many of these decisions. Detroit has been, the victim. But those are decisions that were made not by China and Mexico. They weren't going, come on, here's this tax incentive. No, that decision was made by Apple. That decision was made by Ford. That decision was made by GM, right? So, but now we have to live with the consequences that we have a system that we have, Trevor, that we are trying to upend for many of the right reasons from an American voter perspective. But we're doing it at a time, and I think the approach is haphazard and not and with high consequences. I mean, I had cabinet members who were clients, and I know that they believe they have clear objectives. Like, we have to address the deficit. I mean, the fact of the matter is we are not. If anyone wants to go look at what debt to GDP is doing, it is still rising. If you look at what, for all the fanfare and all the spin, right? Doge just downgraded its cost savings from $1 trillion to $150 billion. And I think they'll be lucky if they get that, right? We are living way beyond our means. And, there are very, very big concerns, but there are no good decisions here at this point, Trevor. That's what certain people have told me. Like, this is a devil or the deep blue sea moment, right? You can stay on the current path, you will end up meeting the devil. Game over, right? Yeah. You can jump into the deep blue sea. It's not a great option. It's not one that you would want to necessarily take. You may not survive, but it is the only logical one that you can take. It just has consequences, and that's, I think, what we're seeing, particularly, as I said, starting from a point in history where the world has almost never been longer US assets. Right?
And they continue to go long. In fact, the share count of the Qs ran up to an all-time high this week.
I think that's mostly US investors.
Because they keep on buying the dip. I mean, it's worked for 15 years.
US retail is definitely being taught to buy the dip. So you can look at the Qs. I like to look at, there's a new ETF, the MAG 7 ETF, MAGs. So you can look at the share count on that. That's also hit new highs because you have a US retail cohort who I think partly driven by politics. A lot of them, wealthy people, are Republicans. Like, as you get wealthy, you tend to become more conservative. Let me keep my money for myself. And they have bought into the bigger agenda. Okay. I don't think they've understood the mechanics of the bigger agenda, but they have bought into the bigger. We can go to that in a second, but they've bought into the bigger agenda. And so I think, as we've seen this weakness, you're absolutely right. You've seen retail, high net worth. You can see it in things like the B of A surveys. You can see it in the shares outstanding have been very, very big buyers of US stock. My fear is they're going to get run over. They're going to get run over by a wave of hundreds of billions and trillions of dollars worth of profit taking from foreigners, and actually US firms who, because if you look at, firms like JP Morgan Wealth, I'm told, have now advocated that they're going back to benchmark on global equity. So they were overweight the US, underweight the rest of the world. So now they're just going back to benchmark. They're not going underweight the US. Some foreign firms may go underweight the US. I certainly would be underweight the US from an asset allocation perspective. But even that just has, these numbers just dwarf what US retail can do. So I'm not really believe that lows in equities until we take US retail out to the back shed and shoot them through the forehead.
Mm-hmm. A friend of yours, an acquaintance of mine, Michael Taylor, did a Spaces last night for an hour and a half, and I listened to every single minute of it. Because obviously, as you know, Mike has a way with words. And he made it made it simple to understand that, as you were saying, the end game, this new system of trade, this new economic, whatever it is, in bringing jobs, manufacturing back to the United States, right, allowing the middle class to rise up once again. Before China was kind of brought in as an economic superpower into the WTO under first Bush and Clinton, and then second Bush. Obviously, like, that makes sense, but the way he put it was true. It made me laugh because it was so true. It seems like it's being done by an administration that must follow the ideas of the man in charge. And that man in charge just happens to not be very good at math. And so we have a problem. The Mike's word says, he's got away. He's got away. And it's just absolutely true, because you come out with this tariff chart and everybody sees right through it. It's like, this doesn't make any sense. Way too much. Then they backtrack. But now, because they can't admit defeat, they are going through, the last number I saw, 75 different conversations for new trade deals, 75 different countries. And I was like, my question was like, I don't believe any of this until I actually see the receipts of something.
Right. I mean, trade deals take, a year is insanely quick for a trade deal.
Right. But it has to be quicker. But it has to be quick, Julian, because this administration absolutely needs some sort of win, like yesterday.
Well,
so something's got it. And so I'm wondering, and the way I'm leading into this is because President Trump has gone out on his Truth Social and talked about positive conversations with Japan. Again, another headline in the last 24 hours. And you have been writing about Japan as really being a bellwether for some time now. So what does a good trade deal with Japan look like if something were to be announced over the Easter holiday?
I don't think you're going to get anything over the Easter holidays. You've had our understanding, we have someone who writes about Japan for us specifically, and there's quite a lot in the Japanese press in Japanese, not translated. So it looks like they had some pretty positive conversations. Trump is very keen on the Japanese paying more for the US military presence in Japan. They already pay about 85% of the costs. He wants them to pay even more. They're fine with that, right? They're used to having hired guns. That's what Ronins are all about, right? And that's basically what you're going to end up. US is going to end up basically being mercenaries for Japan in a way. It's the front line, so, fine. They'll happily do that. The agricultural thing is problematic, certainly within 90 days, because it will come before the upper house elections in Japan, and the LDP is already on pretty shaky ground, and it'll be hard to give too much ground there, but they've already given some stuff, and they've already got the TPP, so the Trans-Pacific deal that they did, which the US then dropped out of under Trump 1. The US then went back to Japan, and they got a deal on agriculture, which was the same. So they're trying to do that. The Japanese are very keen on avoiding the 25% car thing, because even though they're going to produce, and they've been very clear, they'll move more production. So I think Honda said we'll make 80% of what we do in Japan, we sell to the US in the US. I think the issue is time, right? You just can't build a bloody factory overnight. So I think the Japanese are looking for some concessions there. And they haven't got them yet. So, and then that brings us to the other big one, which is the currency. And that is clearly a big issue. There is some sort of Plaza-esque type accord, Mar-a-Lago, call it what you will, to try and walk the dollar down. And that's not unusual. Like I will just say to people, we're not talking about, I think in a way, what everything they're trying to do, Trevor, is actually to ensure that you have a strong dollar, right? Selling an inherently strong dollar, a structurally strong dollar. We have a strong manufacturing base, right? We don't live beyond our means, okay? It doesn't mean a high dollar. Selling, right? It's completely different things, right? So I think they want a low dollar and a structurally stronger dollar. So I think that's kind of what they're trying to do at the moment. And I think we'll probably get more clues on that at the end of the month. But I'm not expecting anything this weekend, mate.
Okay. How about the action in the bond market? A lot of vulnerabilities there. And we started seeing it before, when the Federal Reserve started cutting rates, the market started raising. Right? The rates in the market actually rose. That was a 100 basis point gap. I'm not quite sure where it is right now, to be honest with you, as I haven't been crunching the numbers. But obviously, Treasury Secretary Scott Bessent wants lower yields. He has not been bashful about that. In fact, he needs them to refinance the buttload of debt that needs to come through this year. Is that part of this kind of political game of chicken here, needing lower yields? And even if they do, I guess, what is the trajectory? I guess the best question, what's the trajectory of the bond market here, given the fragility of the U.S. economy and internationals willing to sell U.S. assets?
So I think there's a couple of things. We're definitely. I mean, you came to our offsite a couple of years ago, and we had a whole session on global savings, and we basically think the pool of money available to buy global debt, global assets, is basically shrinking. And it's all about demographics. It's like, you have to think of who buys treasuries. Well, basically, the people who save in the world. So who are those? Well, they tend to be the older people. If you go to your latter half your working career, it's when you have the most surplus income. That's when you boost your savings before you. And those people are basically retiring now. And if it hadn't been for COVID, we think all of bond yields would have come in 2016. And when we look at that trend for demographics, it's basically up into the right for the next 25 years. And selling unrestrained, that would put a new treasury yield somewhere between 8 and 10%, we think, by sort of 2050, right?
Wow.
Now, that's a whole different conversation as to whether that could happen, should happen, will happen. But the point here is the pool of people who can buy debt globally, not just in the US, is shrinking at a time when government's demands on that pool of savings is growing. It's not shrinking, right? We just had Germany just come out and say they're going to spend an enormous amount of money, right? How do you think all these countries that the US is going to force to increase their defense spending and going to, raise that cash, right? It's going to come out of debt sales. In addition, we have just launched economic war, because there's no other thing but this, on China, and they are the largest provider of savings to the world. They make up 28-29% of total global savings, right? And we just told them to go take a hike, right? Stephen Mirren's paper the other day that was on the website called, 3 or 4 times, our biggest adversary, our greatest adversary, China. So we just told them, take a hike, right? Okay, well, if I'm taking a hike, why do I want to, direct my savings? And I know technically on paper, Japan is the biggest holder of treasuries, but the reality is almost certainly China. By the time you aggregate, I think they've got like 760 billion official holdings. But if you aggregate what's held with Chinese entities through Euroclear in Europe, so that it gets hidden as to which to accounts, you're probably at like 1.2 trillion for China. So I think we all have a problem, mate. We have a big problem. in these global bond markets. And yes, look, if we get a recession, fine, right? If we go into recession, then yields will fall. I'm not convinced they'll fall in 30 years. I think the curve, not much anyway, I think the curve will steepen out. That's one of our views. So, short-term rates can drop a lot. Those long-term yields will stay high because we'll be worried about deficits growing even more, right? Even more. And so I think that's where it kind of leaves us, Trevor. I think I am concerned. Like, I'm sitting in the UK now. The fucking bond market is a disaster as well. Like, we had our Liz Truss moment, but actually the one good thing is it's caused the UK government to be absolutely paralysed when it comes to spending money, right? They always have one, eye over their shoulder to the bond market. I wonder if the US needs that moment before you get any serious spending cuts.
Yeah. Well, it felt like it was somewhat happening last week. The 10-year reached 4.6. Today, Thursday morning, as we're speaking, U.S. time, it's 4.31. But there was a speculation last week, after the tariff news and the economic warfare literally just kicked off. China's, weaponizing its treasury, selling their debt. Is it safe to say that was China all last week? Or was that...
I don't know. I think there was, I don't know whether it was them. I mean, look, there was definitely a combination of factors. There were lots of hedge funds who were long treasuries. We had what is technically known as a VAR event, so a value at risk event. So we had a volatility shock across all these trading books. Is vol spike. That means they have to reduce in aggregate their overall risk across their books, and treasuries are typically held as part of that sort of portfolio. So those get sort of turfed out. So there was an element of that, Trevor, right? So degrossing from the hedge funds. There was the basis trade, which is this arbitrage trade that goes on between futures and cash in the treasury market. That depends on volatility too. So some of that got kicked off. There was definitely real money flow. On a day when treasury yields are rising because bonds are getting sold, and the interest rate differential to most countries is widening in the US's favor. Typically what you would see is the dollar would go up, the dollar went down. So what does that tell you? That tells you someone, real money, is selling treasuries, taking those dollars, selling them, buying euros, buying yen, buying Swiss francs, whatever it was, right? And so that was definitely the case too. So there's, was China involved in that? Did they just not turn up at the 3-year auction? Yeah, I think it was very funny how we ended up with massive, record long indirect bidding at the 10-year auction, as if someone had come out and said, can you just turn up, Saudi or Japan or friends of it was a scary setup, mate. It was a scary setup.
Gold continues to be the safe haven bid here throughout all this turmoil, especially when the obviously some vulnerabilities in the bond market, equities being sold off. It's been fascinating because the biggest moves in the gold price, if you look at the day-to-day charts, come when Asia was open and then kind of settles down when the West opens up here. And so obviously Asian buyers are coming into full force, and that's been the case for a couple of years now, at least with their central banks, buying hand over fist. They are price insensitive here. I talked to a lot.
Yeah. I mean, I'm a little, look, I'm a big gold bug. I'm a big fan. We've had these conversations for many times, and I've talked about this. I think that my concern is I share sort of the mining, the North Star guys' view that it's getting frothy here, right? We know that it's getting owned by what I would call weak hands. There's definitely strong hands out there. And I'm worried by the equity market. As I said to begin with, I don't think we've had the flush. And so I can see a situation where, if we do take out those recent lows around 48.50 in the S&P, and this thing starts cratering down to, my targets are in the upper 3s, low 4s, so that we get a true, like the average. So
50%?
No, because we're like 60 change. that'd be like a 40% correction. I mean,
Okay.
the average correction in a recession going back 90 years is 30%. Like
Yeah.
30%. And I think the odds of us avoiding recession are not great, right? Not great. I mean, it's not my base case yet, but I think the odds are pretty high. Are pretty high. I mean, you're pretty, maybe it's 50-50 at this point.
Mm-hmm. The employment data hasn't really ticked up, but obviously we're seeing more of the federal employees that got laid off. That data is going to start hitting the tape here.
Correct. Because they got severance packages, so they can't claim yet. So they're not in the claims data. But if you go and look at things like Challenger layoff announcements, bloody hell, those things are like, we should expect a minus 300,000 non-farm payroll number at some point, right?
Right. Yesterday in his spaces, Mike Taylor also mentioned a lot of the people he was having conversations with this week have already started laying off people, about 5 to 10% of their employees as well. So obviously that hasn't hit the tape.
No.
And on top of that, supply chains are starting to really cinch up. Ships
Correct.
not coming into port or not even leaving China, leaving Asia. And I'm hearing that the shelves are going to be somewhat bare boned if we look forward into about 3 to 6 months. Do you prescribe to that narrative?
Look, mate, as I said, we launched an economic war. What the hell do we think is going to happen? I'm 100% tariff. Right? 100% tariff. You know, further restrictions on the chips. I'm not saying it's wrong. This is an economic war. So what do we think is going to happen? Selling. Get real, folks. This stuff has consequences.
How do you prepare? I mean, how do you prepare for this? I mean, not only with portfolio management here, Julian, but I mean, just standard of living. I mean, or
well, you don't. You're going to standard of living is going to deteriorate. Your standard of living is going to deteriorate. Right? Maybe if the jobs come back to the US, which would be great, and we manufacture more. I'm not sure how many real jobs given automation and so on and so forth. I do think it was ridiculous to who was it that was talking? One of the Fed officials, not one of the Fed officials, one of the government officials was saying, "Oh, we want all those Apple jobs back where we screw those little screws in." Really? Mm-hmm. But sure. But standard of living is going to deteriorate. Selling.
Yeah.
Well, that's when you destroy global trade. The initial hit is stagflation, right? This is stagflation. You're getting another bout of inflation. There's no question. We did some calculations and we said like an 8% tariff, which is what we thought we were going to get. Based upon we thought that they were going to try and raise like $2.5 trillion from tariffs. And we were very, very clear, as you know, Trevor, right from the day of the election. We said, you're going to get tariffs. This market is really going to be in for a rude awakening post the inauguration. It's going to be we called it a reality check that was going to get hit. But we said that we were kind of figuring, well, you're getting like an 8 to 10% tariff would put 1% onto core CPI, right? 1%, so it'd be in the mid fours, right? Now, theoretically, it's a one-off short, but as Jay Powell is absolutely right, it might not be. So it might not be. And the risk is now that we're looking at tariffs which are easily double that in aggregate, easily double that. So, 2% on call. So you trade your mid fives, low sixes, upper fives. Core, right?
Did you happen to follow the Alcoa quarterly?
No, I did not.
This week? Oh, it was pretty telling. It was really, I mean, when we talk about, industrial type stuff, they mentioned that the tariff increased from 10% to 25%, and the exemption for Canadian metal imported into the U.S. was removed, but that's a material impact, and approximately 70% of their aluminum produced in Canada is destined for the United States and subject to 25% costs. So totals estimate 400 million to 425 million annually. On top of that, a portion of the material they need to produce for their production of alumina, supplied by China, they expect tariffs will increase their input costs from 10 million to 15 million annually, and there's no suitable replacement suppliers.
Selling.
Nothing.
Selling. So look, I mean, to go back to your question, how do you protect yourself? Well, this is the part of the correction process. Look, I'm in that camp of that we're in this capital rotation trade, right? This is a time when precious metals are outperforming paper assets. The problem is, and we've talked about this before, Trevor, there are two ways that differentials could correct, right? Because we've got paper assets sit here, we've got commodities kind of sit here, right? You can have the nice correction, right? Commodities rise, paper assets go nowhere, commodities rise, so that differential narrows. Nice, right? You can have the nasty correction. And the nasty correction is paper assets get eviscerated and commodities don't go up. But typically, actually, the problem is they go down a little. They go down less than paper assets, but they go down. So if you want to, if you're a fan, go and look at, say, silver between 2000 and 2002. It went down a lot less than the NASDAQ, right? So that ratio, they corrected. But it went down. Selling, right? Mm-hmm. So in the nasty phase, which we're in, it is extraordinarily hard to be a retail investor. Because unless you are willing to short something against your long, you're probably still going to lose money on the thing that you love to own long term. Which really means you have to have quite a lot of cash. Selling. And you have to be patient.
Yeah. All right. Patience is the key. Julian, I know you are on the road here. Happy birthday.
I'm just about to go to the pub for a pint.
Oh, man. Make me jealous. I wish I'd be there. I appreciate your time. I know it's later in the evening, your time there in London, but thanks for doing this. You've also been a very busy man. Before we let you go, you have the research and the writing from MI2 has just been spot on for a while now, but like 6 months has just been, you've paved the path here. How are people, anybody listening follow up on you, potentially look for some sort of subscription, or what other services are you providing?
So we have our sort of professional institutional product, but we also have, and you can reach out to that, but you can reach out both the same places. So if you go to the MI2 website, and it's just mi2partners.com, you will see two links. So there's the institutional product, and then we have a retail product, which we launched back in November. We'd been doing this product with Raoul Powell at Real Vision, and Raoul just became a little bit too crypto 365 for me, and not enough macro, which is what we originally set the product to do, which was fine. He was very good at doing that. It's just not what I wanted to do. So we went our sort of separate ways. And so we have set up a true macro product, and the objective is to try and educate people about macro, because macro is the dominant product at certain points in the cycle. It is the only thing that counts. Now is absolutely one of those. If you don't get the macro right, you will not get other things right. And so it's to educate people, give people a framework to think about things themselves, and then to try and help people make money. Like, we have concrete trades, and that product is called Macro Capture. And if you're interested in that, you can go there. And if you're just a penniless student, then you can follow me on at Julian MI2 on X.
Yeah. All right, Julian, thanks so much. Safe travels. Happy birthday. Give my best to your beautiful
I'll see you at the
fiance.
wedding, man. I'll see you at the wedding.
I'm counting down the weeks. Now we're past the months. I'm now counting.
Yeah, I know.
Counting down the weeks. So, all right, buddy. Good to see you. Thanks so much.
Bye bye.